Recording is started. Anything I say or do can be held against me in a court of law now. And cool, ready to rock and roll. All right, so in today's presentation, we're going to be going over a little bit into PitView depth. This is a bit of a tricky subject matter, and let me explain the reason why. One of the reasons why this is kind of a tricky thing to put into, this is the intermediate class, which we generally will teach on Monday mornings. And we generally go through a lot of trading theory and methodology. PitView depth is a subject matter that you can either put into like the basic class or in the intermediate class. However, I think before traders start pulling up a tool such as PitView depth, which is essentially just level 2 quotes, which a lot of you that have traded the stock market before are pretty used to, but you've probably never seen it before being showed in the Forex markets. So we're going to be going over that today, but also as we go through some more subjects when it comes to trading in the future. The reason why I'm introducing it to you now, even though we've been going through quite a bit of subject matter on things like swing trading and short-term trading the last several weeks in this class, I'm showing it to you now because as we get a little bit more into trading, especially when we go through some subjects such as news trading, you'll have at least a basic understanding of what it does and how it can help you. We'll be doing a lot of the PitView depth. We'll be doing it live because it is one of those things to where you have to show it. The best way to explain it sometimes is to show it live. Speaking of live, though, let me go in and share my screen with you, and I'll show you some, let's see here, let me share my screen, and I'll show you a little bit on, or do some review of some things we talked about last week. So let me go in and here, let me take my PowerPoint down real quick, pull up my charts, pull up some PitView indicators. And you should be able to see my screen here in just 1 second. All right, here we go. All right, let me start off by pulling up a chart here. There's one New Zealand US dollar we'll get into here in just a little bit. Let me first pull up New Zealand yen, because this is one that should be pretty familiar to all of you. Again, one thing that we've been talking about in class over the last several weeks has been swing trading methods. And if you look at the New Zealand yen pair, we had, over the last several weeks, we were going through a pattern in the market, which is one of my favorite patterns to trade, called the Gartley pattern. As you know, in this intermediate class, we like to do a lot of things live, a lot of review. So let me just spend the first 15 minutes of class just reviewing this for you. First, let's look at New Zealand yen. This is one New Zealand that I've been awfully high on over the last several weeks. Let me go and put our Fibonacci numbers in here. Fibonacci levels connecting the swing low to the swing high. For those of you who have been attending the last couple of weeks, we were talking about the Gartley pattern, which is essentially an impulse move with what we call an ABC correction. There's A, there's B, and there's C, coming right down here. This is what we would call a textbook Gartley pattern that occurred in the market. It just executed here about 8 hours ago, I believe, was the execution on this. If you recall what our parameters were for trading on a Gartley, Phil, you're one of my, Phil's from last Thursday as far as our trading goes. We did this trade in my last Thursday class. We had this one set up. Parameters for our Gartley pattern. what we need is a Gartley is again, an impulse move with an ABC correction. Whoops, forgive the typing here. Where A and C are equal. What we need as far as the harmonics, we need the A to retrace to approximately 61.8% of X. We need the B to retrace between 38.2 88.6% of A, and then we need the C to retrace to 78.6%. Remember, this is kind of the discretionary piece of it. There are some Gartley traders that will trade off of different parameters, but this is one that's most commonly referred to as what we call a harmonic Gartley pattern. And then we have the entry level at 78.6. So when we look at this pattern itself, just to do some review, when you're looking at these patterns as they develop, and like I said, this is going to take you some time. I tend to be pretty repetitive in the way I go through things in the market. But when you look at this pattern itself, when you start to see it developing, if you will, this is on my MetaTrader platform, you have this big impulse move, higher highs, higher lows, higher highs, higher lows, higher highs. This would be considered all one impulse move in the market. When you look at the actual parameters for Gartley as the market is coming back down and retracing against those higher highs, this would be considered our A right in here. So there's our A. And at the A, we need to retrace to approximately 61.8% of X. Now, a lot of you get confused over what X is. X is just the impulse move. Essentially what we're doing is we're trying to buy a dip in the market. We're trying to buy as the market comes down and retraces from this strong trending move. We're looking to trade the retracement as it comes back down. So we get the first parameter of Gartley where, yes, we do get the check mark to where we can say it's not always, we always say approximately or about because it's not always going to be perfect, but it does come down to approximately 61.8% of X. And then there's another question that I got from a couple of students is the B that comes right back up. We have the making lower highs and lower lows from X, which is our A, and then the B that comes right back up, that's the A retracing upon itself, where we're coming up and making a set of higher highs and higher lows. That's considered B. We can actually just draw another Fibonacci level from A, from the high to the low of A, and you can see on the B retracement, the B retraces to 61.8% of A. That's where the B ends. So this B right in here, and here I'll just put the little letter, this B right in here retraces to 61.8% of A. And then where we start looking for entries on a Gartley is when we start seeing a C form, when we start to see that market's coming down and making lower highs and lower lows, continuing on with the retracement, the continuation of the retracement, that's what the C is telling us. And here, let me just delete that other Fibonacci retracement real quick. And then we have the C coming down. And essentially, when you're looking at C, when you know that you have an A that's retraced to 61.8% of X, you have B that's retraced to 61.8% of A, that certainly falls within our parameters because all we need is for B, the end of B, to stop between 38.2 and 88.6 of A. And then we have the C that retraces to 78.6. And 78.6 is going to be our entry point right down in here. This actually gave a very good entry at a little bit better of a level on this morning on the PitView, because the other thing that we'll look for, now PitView's gone a little bit red on the 1 hour totals here. There's a bit of a sell-off occurring as this has come right back up on New Zealand yen to where the PitView on the 1 hour totals has gone negative 0.22. But the other thing that we look for to give us a little bit better of an entry on the Gartley is that we need the pair view. In this case, this is a 1 hour Gartley, so we need the 1 hour total on pair view. When that goes to an imbalance of a positive 5%, that can often get us into better buying opportunities when it comes to Gartleys, because we're looking to buy as it's hitting the 78.6 level. Oftentimes the price can come down to approximately, it won't come down to exactly and hit the actual entry target at 78.6. It'll come down very close and then pop off of it once it comes down very close to 78.6. Other times when pair view can give us better entries into it is as it floats through, like it did here. You see it came through 78.6. If I'm trading this very aggressively, sometimes I'll put my entry in at the 78.6 level itself. If I'm looking at the pair view total, which you can see my pair view total on New Zealand yen right in here, if I wait for that to go to a +5, oftentimes that can get me a little bit better of an entry. Instead of getting in at 87.222 or around there at the 78.6 level, the entry total actually got me in at about 87.18. I believe it was 87.186 here at the buy entry right in here. And then when we're looking at this overall on the chart, the reason why we like Gartleys is because of the fact that they give us a very good risk-reward ratio when it comes to overall. We're going to put our stop right down here below the 100% retracement. We would look for a 1-to-1 risk-reward at the very minimum on this. In this case, you're only risking from your entry to where the stop would be, you're only risking at about 17 pips. If you're right on this, if it comes back up, you can see that it moved and hit your first profit-taking point right up in here, and since then it's gone up about another. It's up about 40. Well, I'm sorry, it went up about 40 pips from that, to where you could have easily gotten a 1-to-2 risk-reward trade off of it. You could have gotten. Right now, it's up about 30 total. From the entry. There's nothing that tells me, and a lot of times what we use is our ulterior exit strategy or alternative exit strategy. We'll look for it to retrace back to 78.6% of the retracement itself, to where you can look for a second profit-taking level if you're doing what we call a scaling out method at the 78.6% retracement of the retracement. That's basically where you connect the high to the low of the Gartley itself, and you're just looking to take your some type of profit. You don't want to have to make it float into a new high. You're just looking for it to get to approximately the 78.6% retracement of the Gartley, and that would be what I would consider, especially when you're doing swing trading, to be your max profit-taking level. Essentially, that's where you're certainly taking your profits off the table. The reason why I brought this up also is a lot of folks were asking me, well, how do you use the pair view? You use the pair view to go to a +5 in order for you to get into the trade. Is there anything that might show you where to, maybe take profits if you see it coming down like this? The big imbalances on the 1 hour charts, the 1 hour chart imbalances that you would look for, to possibly, take this trade off the table. Imbalance on the 1 hour charts. And sorry, I'm going a little bit past our first 15 minutes here. The imbalance that you would look for on 1 hour charts that might make you change your mind as far as, take me out of a trade if I'm in it already, or my entry opportunities for entry and exit. If you're looking for pair view to kind of get you in and out of trades a little bit earlier before they either go against you by too much, is you either look for a +5 or a -5 imbalance. Those would show up as either green and red. Now obviously imbalances are going to come up and down as the market moves up and down, but you see here I just have the 1 hour total on my screen. I'm not looking at leaders or followers or anything of those nature. along that nature, but I'm just looking at the 1 hour imbalance as far as the 1 hour total. So this one I would still look at, as things come up and make higher highs and higher lows. This is not enough to shake me out of the trade yet. What I'll generally look for something that can give me my earlier entry and earlier exit signals for taking profits and such would be looking for that 1 hour chart to go a +5 or a -5. Remember, a Gartley is kind of a counter trend trading method. You're buying into what the most immediate trend is the most immediate trend is a downtrend. These Fibonacci patterns, if you will, can often be, it takes some intestinal fortitude to get into a lot of these trades. But that's one that was sent to me from a student, and that's one that I discussed in my class last Thursday with my students as far as looking at potential opportunities for Gartley patterns. But this is one that I'm still in. Now let me also go in and show you another one that we've talked about as a class. This one right in here, and this is on New Zealand USD. This is another one that's that goes along with, if you will, it goes along with another thing that we've talked about in the class as far as our lonely bar breaks. You can see we have an established trend line down here on New Zealand USD. And on this New Zealand USD, we see that we have at least our 3 points. We connect this trend line to the downside, and we were getting a lonely bar break here to the upside. If you missed that New Zealand yen trade, if you will, it's no secret that the dollar's been driving a lot of the strength in the market as of late. This is another one that has a potential opportunity this morning as far as live trades go. You can see I have my 1 hour total here on the New Zealand USD. What I would look for on this for this lonely bar break is this is already giving, as of 10 o'clock, this would already be giving. We would wait for a bar or a candle to close completely above that trend line. That would give us our buy signal. We'd first stop right below the swing low and look for a 1-to-1 risk reward. So this is giving us another buy opportunity on this. What I would wait for once again before getting into this trade, if you're looking at the pair view, this is what can keep you from getting whipsawed in and out of a trade. Again, this is another trade that a student had emailed me on. This pair view, if you wait for this to go to a +5, again, the pair view on the 1 hour charts, especially when it comes to swing trading, if you look for the proper imbalances to come into play, it can really help you out as far as easing your mind that you are in fact getting into trades along with the market makers. So even though this has given us a lonely bar break right now on New Zealand US dollar, however, what I would wait for is, since we're trading off a 1 hour chart, is wait for those 1 hour totals, wait for the imbalance to go to a +5, a green 5. If that does occur and you get your entry on the lonely bar, this would be another one that I think gives you a pretty solid opportunity for a swing trade. And remember, these are hourly charts, so these are trades to where they may take several hours and even a day to come to fruition. That's why we call them swing trades. But this is another one that's given us a pretty nice little signal here. Up until this point this morning, we've been getting a little bit of a sell-off on New Zealand. But New Zealand was all green here earlier this morning, but it's been selling off a bit from a market maker perspective. So I would wait on this. It was near the top on the 4 hour and the 1 hour global view, but this is another one to where I think it gives us, this would give us a nice little buy signal if we can get the 1 hour total to go to a +5 with that lonely bar break occurring. So if the lonely bar forms, remember this, we'd have to wait till like 10 o'clock to see if this becomes a lonely candle. But then I would also wait for further confirmation of the 1 hour total going to a +5. So those are two opportunities that I was looking at this morning that go along very well with some of the swing trading methods we were looking at over the last several weeks. One of them being a Gartley, the other one being a lonely bar break. We'll be talking more about some more pattern trades three-step methods as far as looking for opportunities. The Aussie's been doing very strong this morning. That's another one that you might want to take a look at as far as opportunities here on your charts. Don't have that much more time to go through any more live trades, but because I want to make sure we get into the market, the PitView depth. But just wanted to show those real quick this morning. You can see the 1 hour total is already rising quite a bit on the New Zealand USD. So keep an eye out on that trade. That could give you a nice little buy signal, a nice little buy opportunity on New Zealand. New Zealand's been pretty actively traded this morning. All right, so back to my PowerPoint here. Let me take some of these things off so they're not showing up on the screen. Forgive me if I cough into the if I cough too much into the microphone here this morning. This weekend our house was stricken by a respiratory infection, so if I start going into a coughing fit, just to give you a heads up. No offense. All right, so PitView depth. So first let's go through and read our risk disclaimer. This is risky, past performance, not indicative of future results. Use risk capital in trading the Forex markets. That's the CYA portion of our presentation every week, covering my butt. So what is PitView depth? Now, this is something to where it really, when you think about it from a trading perspective, I get a lot of questions on PitView depth, which is one of the reasons why I've kind of paused the subjects in our intermediate class to talk about it a little bit. I think people stress out a lot when they look at it because it moves too fast. The most common thing I get from students is PitView depth just moves way too fast. Well, PitView depth, it's basically showing you the entire book of the market as far as all the market makers being tracked. It's showing the exact details, real time, of what liquidity providers are doing at the bid and ask price. What it's doing is not only allowing you to see who is on the best bid and ask, but it's also showing you the trade size below the bid and ask prices. Those of you who traded the stock market, for example, like the NASDAQ, know that they have what's called level 2 quotes, because the NASDAQ is made up of hundreds of market makers out there in the market that are coming together to create the best bid and ask price on the NASDAQ, on the electronic exchange. And what level 2 quotes are showing you is not only who is the best bid and ask, but also where are the bid and asks, where are all the bids below the best bid, and where are all the asks, asking or offer prices above the best offer. That type of depth view, oftentimes for traders that are very astute or a little bit more experienced, can give them ideas on things such as support and resistance. It can confirm volatility. It can confirm buy and sell imbalance, or buying and selling pressure based on the activity that's being shown on not just the best bid price, but where all the prices are beneath that, and on the best ask. Now we're going to go through some basics of PitView depth because this is something that was requested as far as you folks go, as far as what is this actually showing me. Well, first things first, when you pull up PitView depth, and don't worry, we're going to go live to it. Best way to really explain it is to go live to it to give you an idea of what it's actually doing for you, the trader. I'll make sure I have my little ink pen out here. So what it's showing you is basically the bid, what we call the bid depth, which will be right over here, and the ask depth, which is right over in here. Now when you're looking at this, you can see that it's color coded. We have yellows, we have greens, we have blues, we have reds, and same thing over in here, or yellows, blues, or greens, blues, reds. Now when you're looking at the bid and ask price, what you're looking at, generally speaking, on your trading platform is you're looking at this yellow area, is what's showing up, generally speaking, on your trading platform. Not with all the liquidity providers involved, because we all know that PitView is showing you basically all the major liquidity providers in the market, whereas your brokerage company may only use one or two. But it's essentially showing you this yellow area right up in here. And this yellow area is essentially showing you the best bid price, which is right up in here. And this yellow area up in here is showing you the best ask price. Now those liquidity providers that we have on the PitView platform, where for example on PairView, where it shows you how active LP34 has been, how active LP23, and so on and so forth. Essentially, this is where the rubber meets the road, right up in here. A lot of what PairView and Global View and Group View track is whenever liquidity providers either lead or follow inside the bid and ask price, it's generally going to be in this yellow area right up in here at the top, because this is showing us the best bid and ask price. Now, when we get it past the best bid and ask price, we're also showing, okay, well, where do all the liquidity providers stand below that best bid price, and where do all the liquidity providers stand above the best ask? And a lot of times that can give traders some type of indication of not only buying and selling pressure, it can also be an indication of support and resistance. It can be an indication of volatility, if you will. The problem with it is that a lot of traders face is the fact that it can move very fast. It can be very volatile when it moves. It's very hard to get a clear picture because it seems like you're watching a Japanese animation movie sometimes when you're watching PitView Depth, because all these colors are changing so fast. But let me just go through real quick, and I'll go through the basics of each and every column, starting with LPID. That doesn't change from our PairView screen or from Global View or any of the other screens that we have. This is essentially, you know that the liquidity providers in the Forex with PitView, in order for us to disseminate this information to you, you know that they require anonymity. And these liquidity provider IDs are going to stay the same. You know, instead of saying Bank America or Barclays, we assign them each an ID, and those IDs don't change. So LPID does not change from PairView. That's showing you the same thing as far as showing you how active the individual liquidity providers are. The next screen, the next column right over in here, the time, this is another important fact that we've recently added, by the way. I kind of skipped over this column, but it's showing you the time in which they changed their bid and ask price here, or the last time they changed their bid or ask price. So I'm skipping ahead here, though, to the change. This is showing you the change from the previous bid ask that they've posted. So when they're looking at the change, what it's showing you is, okay, from the previous bid price, we're looking at the bid column over in here, but it's a lot of these numbers are going to be the same as the ask column over in here. When you're looking at the change on the bid price, for example, if it shows a change of, let's say right in here, you see this +1 right in here. When it shows a change of +1 for LP23, it's showing, and that LP23, remember the yellow area right in here, this is the best bid, and then the yellow area over here is the best ask. It means that their current bid is 1 fractional pip. Whenever it has a 1 or a 2 under the depth or the change, 1 fractional pip being the minimum quote size for an individual currency pair. It's showing you that in this case LP23, the current bid is 1 fractional pip better than their previously posted bid. So if it's a +1, it's saying that the LP23 has raised their bid from the previous bid that they had posted. They've raised it by 1 fractional pip. When it goes negative, it means that they've lowered their, this change is showing from the previous bid that they've posted of how far away their current bid is from their previously posted bid. So that is just showing you the change from the previous bid for the individual liquidity provider. So in this case, again, the +1 means that LP23, their current bid, which is on the inside bid or the best bid in the market, is 1 fractional pip better than their previously posted bid. The size right over in here, this is another one that gets people. This is posted in millions. So if LP23 is currently willing to, has a bid in, which means that they're willing to buy Euro USD, essentially exchanging euros, US dollars into euros, willing to buy euros. It means how much are they willing to buy. This is already always going to be posted in millions. People ask about the size down in here always being posted at 1. Well, one of the reasons for this, and forgive me for going a little off topic here because people ask questions on this all the time, is people always say, well, Steve, the size on the PitView depth, more often than not, it's set at 1. I wanted to talk about this for a second because I think it's a very interesting topic. So in this case, LP23 is willing to buy 1 million on the euro dollar at that best bid price. LP34 is willing to buy 1.2 million. But you see, more often than not, the bid is going to be posted at 1 on here. Sometimes you'll see 2, sometimes 0.5, but more often than not, it's going to be set at 1. And that's something that a lot of people will say, well, that's, I don't see a lot of changes to that size that often. I don't know how many of you have ever heard of something called auto execution. Now, this isn't in my presentation because I just want to talk about it. Auto execution essentially means most of the time liquidity providers or market makers, when they post a bid and ask price, generally speaking, they're not always going to post the bid and ask with the actual amount they're willing to buy or sell. And I'll go into a brief explanation of this. Generally speaking, they're going to post what they guarantee at a bid price or guarantee at an ask price. For example, even if LP23, let's say, was willing to buy 50 billion euros today, well, they're not going to put their best bid out there for 50 million. What auto execution is, or is what essentially what a market maker will guarantee at the bid price, meaning I'm willing to buy Euro USD and I guarantee 1 million at that price. The reason why you're going to see 1 come up more often than not is because most market makers will only post what they're required, what they'll guarantee at the bid price or at the ask price. I'm looking at the bid here, so forgive me. Now, when you're looking at it, the reason why that won't change, and hold on, need to go back a little bit here on my presentation. I was an options trader, for example. A lot of times when you're trading on with options, if I'm buying and selling options, and let's say I'm dealing with large institutions, and let's say I'm trading on the options floor, and one of my institutional traders wants to buy, let's say, 3,000 Microsoft call options. Well, the thing is, if I go into the market and I bid for 3,000 call options on Microsoft, I'm going to be showing the market my entire position, and they may back off of what they're willing to sell to me at, because they know Nuri has to get something executed that day. So what I'll generally do is, instead of posting that 3,000 to where it might cause people to back off the price because it shows how much I need to actually buy. Generally speaking, a lot of market makers, they're only going to post what they guarantee at a price. That's generally how it works in a lot of markets, is they're going to post what they guarantee. If it's somewhere around what they guarantee, 1.2, they have to, if they have more, they might, if it's close, like 1.2 million, they might post it. But generally, they're just going to post the amount that they guarantee at the bid and ask price. The only time that it really changes quite substantially might be like 0.5. If they're guaranteeing less at that bid price, like 500,000, then they'll have to post 500,000 or 0.5. Now, I know that may be confusing to a lot of you, but I just wanted to explain why 1 will often be the number that comes up, because on the institutional feed, 1 is the guarantee that most market makers will guarantee at the best bid and ask. They'll only really show what they guarantee at the bid and ask price. It doesn't necessarily mean that that's how much they're buying or selling, but it's kind of like in poker. You never want to show too much of your hand. You never want to go all in on every single hand. You just want to, keep raising or lowering your bet by the minimum bet size, essentially. So anyway, that was a little bit more detailed than explanation than you probably wanted, but all that is that size is showing you the amount that they're putting up at the bid, how much they're willing to buy. In this case, 1 million or 1.2 million, and how much the ask size is at 0.5 would be 500,000 right in there. Now, this is the actual bid depth and ask depth right over in here. I didn't put the little horizontal or the rectangle around the ask depth over in here, but this is showing you the depth of the market. 0 is going to be showing you, of course, here at the top in the yellow that, you know, this is all the action. This is how many liquidity providers are on the bid price, on the best bid, and how many liquidity providers are on the best asking price. So the 0 just means that they're right at the best bid or right at the best asking price. The depth down in here, as it changes colors, you're going to see these numbers will change, and the colors will group all of these together. So this is showing you how far each individual liquidity provider's bid is from the best bid or the best ask. I should have had bid ask up here on the PowerPoint slide. That's what the depth is showing you. Now, when you're looking at the depth, when it gives you that number, that's also going to be in fractional pips. So LP23 and LP34 right up in here, these are both these guys are at the best bid price. Whoops. Hold on. A little bit of a problem there. There we go. When you see LP29 and LP12 right in here, when it shows a 2, and you saw that it's green, it's a different color, showing that they are outside of the best bid. And like LP12 over here is outside of the best ask. 2 means that they're 2 fractional pips away from the best bid price. LP24, all these other market makers down in here, they're 3 fractional pips or 3/10 of a pip away from that best bid or ask price. And for some reason, my screen keeps going black. There we go. Come on, buddy. You can do it. There we go. And so on and so forth. So when all these colors are grouping these things together, what you know from that is that it's just showing you how far away they are from the best bid or ask price, and it's grouping them all together. The same thing over here on the ask price. Like LP12 is 1 fractional pip away from the best ask. LP23 and 24 are 2 fractional pips or 2/10 of a pip away. All these market makers are 3/10 of a pip away from the best ask. And here LP29 is 4 pips. And then once we get past a certain level, generally it's going to show you, when you look at the colors, 1, 2, 3, 4, 1, 2, 3, 4, it'll show you kind of the best bid and ask size for the top 5. And then once it gets past that, everything else will be listed in gray. Things that are just way outside of the best bid and ask price will generally be in gray. But that's what the colors are doing, is just grouping this together of which liquidity providers are on that bid and ask price. So I'm going a little crazy here, I know, with my little ink pen. Now, again, just going through the basic columns, the quick bar up in here that you often get a lot of questions on, I call it the quick bar because it's just going to quickly show you, it's going to show you the number of liquidity providers, the best bid and the best ask price, and it's also going to show you the left-hand number is going to show you the number of liquidity providers at the best bid or ask, and the right-hand number is going to show you the actual size at the best bid and ask price. So when you go back here and you look at that best bid and ask, it's just showing you in this little color bar up in here how many liquidity providers are at the best bid and ask and what their size is. And then as it goes to different colors, it's showing you outside of the best bid and outside of the best ask is how many liquidity providers are there and the actual size of the market at those levels. And this little color bar down in here will kind of give you almost like with the pair view, it'll show you the exact amount or kind of the size of the market at the bid and the ask prices, as far as giving you kind of a color code of how strong the market is at those different bid and ask levels. Now, I know I'm going through some basic information here, but you just got to know what it's showing you first, because the key to using PitView depth is to really keeping it very simple as far as what it's showing you. You know, the depth of the market is it can be an important thing to look at various times during the day. And as I said, as we go through a little bit more information in the class, I'll show you in different ways as we go through different trading strategies, especially with something like news trading, of how PitView depth can be used. And I'll give you a bit of a live demo on it here also, here in just a little bit. But some common ways as far as trading with PitView depth. And I just want to talk these through with you real quick, because a lot of people think that it's, man, I look at this thing, I stare at it, and you almost go into a seizure sometimes because the colors are changing so fast. You know, there's more ways than this to trade with PitView depth as far as looking at it. A lot of times what you're using PitView depth for is for confirmation. You know, a lot of what PitView is used for, what makes PitView and PairView and Global View and Group View and all these different indicators that are tracking market maker activity and liquidity provider activity so special is the fact that it is like the ultimate confirmation indicator, PitView as a whole. Because when you buy and sell, you know you're buying and selling along with market maker activity, along with where the big money is. So when you're trading with PitView depth, a lot of the, three common ways that it's used is confirmation of activity, for one thing. You know, as we look at our pair view, for example, as we look at our different market makers that are showing different types of activity, it can confirm which liquidity providers are the most active real time, because PitView depth is giving you that real time live streaming look at what all the market makers are doing at the bid and ask price. So with that, when you say confirming liquidity providers, and I'll show you this when we go in and do it live here in just a second, a lot of what that boils down to, if you see LP34, let's say, has controlled 60% of the market activity at the bid price, but you're sitting there watching PitView depth, and you see that LP34 has not changed their bid or ask in the last, you're staring at it and they haven't changed their bid or ask, or they haven't been as active at the bid and ask price for the last, 10, 15 minutes or a half hour. If you're looking to enter in the market, you can kind of say maybe that market maker is not as active right now as they were before. So some of it comes down to, for those folks that like track individual liquidity providers in the market, it'll give you a real-time look at how active they are in the market. Another way to look at it is for what I call confirmation of volatility. Now, what is volatility? It's, volatility is, how fast and how much does the market move by? When I say confirmation of volatility, you might ask, well, Steve, what the hell do you mean by that? Well, it confirms how active the current price action is in the market. What do I mean by this? Is as you see PitView depth, the more it moves, the more it flashes, if you will, the more it looks like a Japanese animation cartoon. It's showing you that there is a lot of market maker activity at the bid and ask price. The faster it's changing, the faster the lights are changing, it means that means that there is more activity at the bid and ask price. You were looking at very active market conditions. Now, PitView depth can be a funny thing to look at, because if you look at it, now let me just listen to my words here right now. If you're looking at PitView depth at, let's say, 8 a.m. in the morning, right when the U.S. session is opening, you're going to see that thing blinking and the colors changing and everything's going really fast. Market makers are constantly updating their bid and ask prices at like 8 a.m. in the morning Eastern time at the start of the U.S. session. Now, if you look at PitView depth at a lot of times at like 3:30, 4 o'clock, 4:30 in the afternoon here in the U.S., in the afternoon of the U.S. session, as the U.S. session is getting ready to close, and let's say the Japanese session and Sydney session are getting ready to open, you'll see it come down to a standstill. The lights will not blink as fast. They won't be changing color as fast. That's showing you exactly what most of us know from session to session, is that volatility is slowing down, that there's not as much activity at the bid and ask price. The markets are not changing their prices as fast. All that means to you as a trader is if you're in more volatile, if there's a faster market condition, if liquidity providers are changing their bid and changing their ask substantially or faster during a time frame, it means that you can expect price to become a little bit more volatile during that time frame. If you see the lights are barely changing colors, it means, a lot of times when we look at our charts on like the 5-minute chart, where you see hardly any movement in the price action. A lot of times you'll look at PitView depth and you'll see those colors aren't changing as fast. So the more active it's changing, the more volatile the conditions are, the faster the market prices are changing, which means that it gives you a better indication that there are more active market conditions and there's the potential for more market movement the faster it's changing. And then buying and selling pressure, which kind of it can be boiled down. It can really boil down to even when we look at this from a market maker perspective, if we can see the depth of the market, you know, the more size on the bid, the more activity is on the bid price, meaning we have a large amount of activity, we have a large size on the bid, multiple market makers at the best bid, and underneath that best bid, it can give you an indication of real-time buying pressure. So the more yellow is on the screen and the more green is on the screen, if you will, it's showing you that there's far more activity on the buy price than there is on the sell price, which is the offer, and vice versa. So when you see that the more size and the colors favor either the bid or the ask price more, it's showing you, it's giving you an indication of real-time buying and selling pressure. Now, PitView depth is whenever you explain level 2 quoting to people, and this even goes back to when I used to teach for the exchanges, whenever you would show people level 2, oftentimes I would never even use a PowerPoint. You just kind of have to pull it up, and it would often get awkward, especially if there was fast market conditions, because the colors would change quite a bit. But it was also kind of the best way to explain it. So the more size on the bid, real-time buying pressure, more size on the ask, real-time selling pressure. And the more size there is on those bid and ask prices through PitView depth, it can also give an indication of support and resistance in the market. So now that I've talked these through a little bit, let me go in and kind of show you real time and pull up a live PitView depth window. And again, PitView depth is not something that can really be explained as far as how to trade it. You can't really explain it in just a 1-hour class, if you will. It takes some time, so that's why I just went through some basics of what it's showing you. But let me pull up a PitView depth window. What you can do is you can go up here under indicators and you can go to open PitView depth. Or what you can also do is if you look at this thing that looks like a scuba sign on here, you can open it there also. All right. Now, let's actually also use, let's pull up a global view. Let me pull up a group view window and a pair view window also, just so we can kind of take a look at these things. We didn't get a chance to look at it, so let's go ahead and take a look at the Aussie dollar here. Australian dollar we see is very much well bid. Let's see, Aussie's more well bid against the dollar here, so let me double click on that. And I know I'm looking at some 4-hour charts here. Let me open up my pair view a little bit more in here on the Aussie dollar, and let me also pull up a chart on the Aussie US dollar. I'm just looking for a currency that's very well bid or well offered on here. And on the PitView depth window up here, what I'll do is I'll pull up Aussie US dollar. Now I had it up here on the 4-hour charts. Let me show it to you on. Let me change the time frames a little bit here. Most of you already know how to look at those columns. Actually, let's just look at it over a 5-minute time frame over in here. Okay, so what I have here is I have the Australian US dollar pair on pair view over here, just showing you the 5-minute totals. Now the first thing I might look at, and let me just take this from a really basic standpoint, and then we'll go up from there. Is the first thing I would look at when you're doing much more in-depth analysis, especially if you're doing a short-term trading, because a lot of people that use PitView depth, that use level 2 type quotes, that's one of the reasons why I kind of took off, changed this to a 5-minute chart, because a lot of people that use things like PitView depth for their entries, a lot of times they're more short-term as far as trading goes. So that's why I pulled up the 5-minute window. Now, one thing to remember about as far as pair view, and stay with me here, okay? Pair view, what it's doing when it says leading, following, and totals, a lot of what pair view is doing is translating level 2 quotes for you. Does that make sense? Because we know this PitView depth is moving very fast. You see the colors changing very fast on here. PitView, pair view over here is translating that information. You know, LP9, for example, just went inside the bid. You know, it's going to, you know, it led inside the bid. So it's changing the leading and following in our totals based on all of this bid and ask activity. So that's one basic thing to remember, is that a lot of what pair view is doing is translating the PitView depth screen over these certain time frames, which is a very powerful tool when you think about it. Now, the first thing I would look for is if I'm looking, and let's say I'm closely following individual market makers, if you will. Well, the first thing I would look at is, well, I see LP34 has controlled about 38% of the market as far as the bid and ask changes go. One of the things I would look for on here is, as I'm watching it over short term, you know, if I'm tracking LP34, which you can do on here, if you go up here, you can highlight. You see where it says row highlight on or off? I can click on LP34 when they come up here. There we go. I just highlighted LP34. Well, I thought I did anyway. There we go. Double clicked on LP34. And what it's doing is it's confirming to me LP34. If I'm tracking LP34 over here, who's accounted for about 39% of the market maker activity, all PitView depth is showing me in real time is LP34 still committed to the market? You know, even if you're looking at it, you know, from the start of the session and it tells LP34 has controlled 39% of the market maker activity, one thing PitView depth is going to do for me is it's going to confirm whether LP34 is still very active in the market or not as active. And you can see LP34 keeps on changing their bid and ask up to the top bid and ask prices. I have them highlighted in white. You can do that right up here. You see this, the row highlight on or off? You can turn that on and just double click on the market maker that you want to track, and it will turn them white so that you can see them much better in the market. So that's the first thing, if I'm doing short-term trading or even scalping, that I might do, is just confirm that, yeah, LP34 is still most certainly controlling a large amount of the market today. Now, the second thing I would look at when it comes to PitView depth is whenever you get large amount of, you know, the colors, all it's showing you is buying pressure and selling pressure. That's the real way that you want to look at PitView depth when you take a look at it. When you see that the columns expand, like right now the column expanded, and you see how fast this rolls. One of the bad parts about doing this live is if you look at it, when it goes all yellow, and when you see the yellow and the green and the blue, when it gets thicker, when the colors are showing more on this end as far as the yellows, greens, and blues, it means more buying pressure. When it goes up and shows more yellow, greens, and blues over in here, it means more selling pressure. Now, what I always look out for actually is I kind of keep an eye out more on the gray and the hot pink and the red, because you know the more gray is on there, the further away people are from the best bid and ask price in the market. It's kind of a weird way to look at it, but that's one thing that I do to kind of slow things down. If you're doing real-time analysis of level 2 quotes, you know, oftentimes that the market is changing and you see that it's consistently showing a huge amount of yellow, blue, and red over on this side, and you got very little yellow, green, blue, and red over on this side, and a lot of gray, it means there's more activity occurring on the bid price. Same thing goes over here. Now, I know the market is changing and it's moving very fast, and this is the one complaint students have, and this is the same complaint that stock traders have, by the way, when they're looking at something like NASDAQ level 2, is that it's just changing way too fast. In my mind, you look for some type of trend. You kind of take a step back, and if you see that the bid column is changing real fast and it gets thicker, and then the ask column goes down and starts changing and gets thicker, that just means that there's really, when you look at the Aussie US dollar, what it's doing over on a 5-minute time frame right now, whoops, let's take a look at it. We see that it's been going up here on the 5-minute chart. It's been going up here. It's up about 10 or 15 pips here in the last couple of minutes here. When you look at it on that 5-minute chart, though, well, when you see that this is going, if you see that the colors are consistently showing yellow and green and blues, and it's very thick as far as the color coding on it, it might show you that there's consistent buying pressure here as it's coming back up and confirm that type of buying pressure. As you see more activity start to occur at the ask price, it can start to show you more selling pressure coming into play. Now, whenever it's actively changing like this, I barely even look at it. I concentrate more on the pair view right up in here, because this is why I don't teach this to the basic students, because oftentimes they get very confused over what this thing is doing for me. I generally tell PitView people that if you don't understand what's happening on the PitView depth, then just focus in on pair view, because remember, all this is doing is translating this information for you and actually keeping it and giving you a much more smoothed out translation of what's occurring on this level 2 type of charting. Now, if it's changing very fast, you know that the market is still active. So what I'll generally do is just trust whatever pair view is telling me if I see that there's a huge amount of activity happening between the bid and ask price on here. And you can see the colors are changing, showing the Aussie dollar is probably very active between the bid and ask price. We still have extremely active market conditions. And then all I'm going to do is I'm going to go back to my pair view to see and translate all of that information that's being disseminated from the PitView depth. So 3 things that just confirmed for me. It means that LP34, the most active, you can look at it from the most active market maker standpoint. If you see that they're actively changing and they're still active participants in the market, it's confirming that you're still in very active market conditions. As the colors are changing very fast between the bid and ask price, it's also confirming that there's an efficient market essentially. There's a lot of activity in the market between the bid and ask price. Now, when it gets into be this afternoon, let's say if the Aussie dollar was trending up and it kept on trending up, a lot of times what you'll see, like when it gets to the afternoon, especially in the US session, is you'll see PitView depth a lot of times will slow down to a standstill. Meaning right now it looks like just like that Japanese animation cartoon that will give us all seizures, correct? But when it gets into the afternoon, when you're looking at pair view or any of the short-term indicators from through the PitView indicators, a lot of times this thing will come to a standstill where it's barely moving. The yellows, the greens, the reds, the blues, it's barely moving, showing that there's not a lot of activity between the bid and ask price from the multiple market makers. In that case, it's telling you that market conditions are kind of slowing down. Now, as far as depth is concerned, one thing I just want to reiterate as far as the point goes is that if this does move too fast, if you have a hard time translating it because of the bid and ask is moving too fast, remember what the benefit of having something like pair view is. And the benefit is that it's translating all of this information that's moving real time into buy and actual sell imbalances on the pair view screen. People ask me all the time in these classes, Steve, what do you use pair view? What do you use PitView depth for? For me, I can't honestly say that I use it actively, like every single second in my trading. Sometimes, if I'm doing short-term trades, I'll use PitView depth to confirm market activity, to confirm that individual market makers are still active in the market, actively changing their bid and ask prices. Sometimes before news events, this is one thing that I haven't discussed yet. A lot of times during news events, right before news events especially, because this is giving you a real-time view of what's occurring between buyers or sellers in the markets. This is something I'll be talking about in a couple of weeks when I go over news trading with PitView, is that a lot of times what will occur is right before news events occur, you'll see one side of the bid or either the ask go straight yellow. If you see like the entire screen going yellow over here, the entire screen going yellow over here, with very little subcolors would be the greens, the blues, and the reds. Oftentimes right before a news announcement occurs, there can be huge fluctuation between supply and demand. And especially right after news announcements occur, you can see huge fluctuations between supply and demand on the buy and sell side. If you see like 1 minute before a non-farm payroll comes out, if you see that there's an ECB interest rate announcement, sometimes you'll see this entire buy side of the equation go yellow, showing that there's a huge amount of market makers coming out wanting to buy the underlying pair. Same thing over here, it can go like all yellow, and that can give you maybe a heads up or an indication if you're news trading of the directional move that traders are looking to make off of a news event, of a possible where the underlying speculation might be on whether a news event will be, of where a news event is coming out at. And then right after a news event occurs, if there's large spikes in the market, if you look for PitView depth, especially if you're trading off something like a 1 minute chart, if you see this, if you've gone long on a security after a news announcement and you see the entire ask side go yellow, it means that selling pressure is coming in. The more yellow and green over here between the bid and ask, bid or the ask price, the more buying pressure and selling pressure there is. Right now you see kind of an equivalent of it. I mean, there's kind of equal amounts buying and selling pressure, which kind of makes sense over here because it's kind of topping out and going sideways. All of these things will be discussed in later classes. I get questions on PitView depth all the time. I just wanted to go through the basics of what it's showing you for now, of what the columns mean, what the colors mean. As we go through some more subject matters here in the intermediate class, I'll be pulling up PitView depth some more to kind of slow things down for you on how I view it, because you may have just been drinking out of a fire hose just now with me just going through so many things in such a short period of time. So we'll slow this down for you a bit, but my point being to PitView traders, if it moves too fast for you, don't even pull it up. In the pair view, the beautiful thing about it is it's translating all of that bid and ask activity for you. You have to be a very astute trader to be able to comprehend and define price action, especially when it moves this fast on the level 2 screens. And and it's something that we'll talk about more, but again, if it's something that gives you seizures when you look at it, just remember the power of what pair view shows you, and that should bring you back down to earth. So with that being said, I've kind of used up my hour here. I apologize for going a little bit longer. Next week, we're going to continue on with our subject matter on swing trading. I want to kind of put a bookend on swing trading by going through a little bit more on. Oh, you're all welcome. Steve, why are there so few currency pairs on PitView depth? Is the question. On PitView depth, when you look at it, the pull down menu or the pull down screen, you can actually type a symbol in on the PitView depth. So like if you want to look at pound yen, if it's not showing up with pound yen in the PitView depth screen, you can type it in. Under the symbols, generally the symbols are going to be the last pairs that you've looked up on the PitView depth. So the question being, folks, is why are there so few symbols? If you want to look at New Zealand yen or pound yen or whichever pair that you want to look at, PitView depth under the symbols, you just need to type in the symbol. That's all you need to do. If you want to type in Swiss yen, or if it's not showing up on the pull-down menu, it's generally going to be because maybe it's a pair that you haven't looked at before on the PitView depth. So just type in the symbol that you want to see, and it'll pull it up for you. All right, so I'm going to go ahead and stop the recording there.